Let's get ready for some Fed rate hikes. At least that's what the market is pricing in. Big bullish day in the markets overall. We're going to talk about that on today's market brief. Going to keep it quick and to the point because, well, we have a lot of stuff going on tomorrow. We have economic data and also the Fed raising rates. You're watching the Stock Market Brief Show. My name is Michael Silva. We use technical analysis and intermarket analysis to get a good idea as to where the... All right, everybody, welcome back. So yeah, big bullish day in the markets, that's for sure. We have tech and consumer discretionary leading the way and consumers not too far behind. Now, consumer staples have been getting a little bit beat down as of lately. To see some relief there makes a little bit of sense. But tech and consumer discretionary, big day, up over each of them, up over 3%. All the indices right there in the green. We had the VIX down in the red. The only red sector here was energy. And I tell you what, it kind of makes sense in a way here because energy has been a massive performer and now it's taking a little bit of a breath. Oil was off pretty hard today, up down 6.38%. And this is a very fast move to the downside from peak to around 130. And now we're seeing that pullback that we kind of anticipated would be coming in the near future. So very volatile here. So you need to be very careful within that market. The dollar has been relatively flat for the most part. A couple shooting star type candles. If this starts coming down, it's a very big possibility that we see some forward momentum there into the S&P 500 as there has been a inverse correlation there. And that also might very well help reignite the possibility for commodities to start back up again. Gold has been coming off, right? So gold came off hard and fast from hitting this previous resistance, which we talked about. Now it's taking a little bit of a breather here. Does this mean gold's done for? Absolutely not. This could be just simply a back test from a massive breakout, and then we could head higher. This is one to definitely keep an eye on moving forward, especially coming out after the market digests the Fed meeting. And more on the Fed meeting, what can we expect? Well, the market is pricing in a 0.25% rate hike or 2.25 BIP rate hike. So what does that really mean? Well, if we take a look at the S&P 500 chart, chances are you probably understand that the market has been pricing this in already. So what would kind of throw the market as far as, surprise us? Well, I think a surprise would either be a 0.5 or no rate hike whatsoever, which would be 0.0. Okay, so those would be the levels to watch. So for example, if 0.5 comes out, the market might not be ready for something like that, so the market could potentially sell off. Okay, if it comes at no rate hike, that could be a very bullish indication for the market to start ripping higher. But 0.25, relatively not much there. So once that comes out, if this would be my expectation, you got to start paying attention to what the Fed is going to be saying around quantitative tightening and maybe some of the questions that they ask, because that can always drive market volatility as well in the marketplace. Now, if we take a look at what happens after the first Fed rate hike, I found a couple interesting things here. So the next 3 months after the Fed rate hike, this is the next 6 months, next 12 months. So if we take a look at the next 12 months, 100% of the time, the market ends up being higher. That's interesting data. The next 6 months, 75% of the time. The next 3 months, half of the time. So when you see this, if you're more short term and you want to know where things might go, you're like, well, there's a 50-50 chance, right? Based off historical data that we might go up. But if you take it one little, bit further, what were the big months here? Okay, so the big one was right here. That was in April up, and the big one right here was in March. Interesting. Where are we right now? Well, we're in March, right? It's March 15th. We're heading into April. Where does that line up with? Once again, that lines up with March and April seasonality. And I've been saying this over and over again, meaning that there is a very strong possibility as we come into quarter end that we see these type of markups and the market actually, beyond all this bearish sentiment, we start seeing the market rally, which lends hand to the bears kind of like throwing in the towel potentially just to get ready for another possible leg lower. So we need to keep an eye on some key levels because just because the market, starts going up, which we talked about in a prior video, doesn't mean that, we're out of the woods yet, right? There's a lot of bad things going on overall. I'm not going to dive into that in today's episode, but there's a good reasoning as to why the market could continue to head lower. But, we showed the comparison between 2008 and 2022, and we looked at the NASDAQ. If you haven't watched that video, go watch it. The thumbnail, it's just the comparison between 28 and 2022. And what we saw was a big rally within this month and going into next month. But then the real selling actually occurred. And that's how you really trick market participants. So if we take a look at the SPY, Okay, let's look at the risk range. Where are we? Well, we're on the upper side, so we're up on the week here slightly, right? The upper range here is at 435. So if we get some continued action to the upside, it'd be, start paying attention to that level around 435. Okay, but overall, you keep in mind the trend's still broken, right? So if you're bottom picking, just understand we have lower highs, lower lows right here. From the low end, it'd be 405, which would take out those lows, and that would definitely apply a lot more fear in the market. So overall, a positive development just this one day, so it doesn't give us too much data. We need more data. We need to get back above that 430, right? 430, there was a lot of previous resistance and support in that area, so a lot of headwinds overway. If we take a look at the 15-minute time frame, you can see that we did flag out here earlier intraday, and we started moving up. Now, kind of interesting here. I should have zoomed in a little bit. You can see a little left shoulder head, right shoulder right here. You can call this an inverse head and shoulder, and that would take us up to right around this area, right to the upper range, if that is actually the case. So that could be something to potentially watch out for. Keep in mind, we did get back above that 5-day moving average, but it is still declining. So be mindful of that, right? So typically, in order to see this start turning up, right, it's not going to go straight like this. I mean, it could move, up quite a ways more. We've seen crazy things happen, but typically you want to see it do something like that where this starts to curl up slowly but surely and then starts taking off. That would be a more bullish thing, but we're not too far off of it as it stands right now. Now, back to this inverse head and shoulders breaking out. So what I want to call out here is if we take a look at the VIX, you have a possibility for head and shoulders. Boom, boom, boom right here, and you have a pretty clearly defined neckline. So that right there could take us to fill this gap right at around here, slightly lower, and that could give us what we need in order to see that potential move in the S&P 500. So that is kind of what I'm keeping my eye on as it stands. Qs on the daily time frame, not too far off from the upper risk range, which is down just right below 340. People are starting to take notice that this is going from expansion and it's tightly contracting, and we called this out on the previous video. And really what I want to call out here that's more important is we had some big legs down in the market, and now we're starting to see just a lot more bouncing, a lot more chop side to side, which can wear out the bearish mentality. So we need either a big news headline to hit the tape to see a big leg down, and or we need to see this market start roaring back up to start reinvigorating a potential bear case where they can potentially, give a better entry from a risk to reward standpoint if you are bearish, right? If we take a look at the 15-minute time frame, very similar to the S&P 500, flagged, started breaking out. Okay, where can this go? Well, I mean, upper risk range is where you can target. As it stands right now, still a declining 5-day moving average, but the price is slightly there above it. Okay, so not much stuff going on overall. IWM continues to be right, not going anywhere, to be quite honest, below some of those key moving averages. Upper risk range is at 204, lower is just above 187.50, but we haven't really moved anywhere as far as price goes. In the 15-minute time frame, you can see here, didn't perform as well as the other indices today, and it is still chopping back and forth as it stands. This could very well be that Wyckoff accumulation pattern that we kind of talked about in previous episodes, but we'd still need to see this move a lot further and a lot faster than what it's currently doing. So we will keep an eye on that going forward. If we take a look at the 10-year yield, this is going to probably have quite a bit of movement going into tomorrow's session. A lot of people are calling for this to be a breakout and head a lot higher. Other people are calling it for it to fall. It's made a large move far and fast, so to see it take a little bit of a breather here soon, I'm sure it can. I'm keeping an eye on this potential rising wedge pattern because it does line up with the TLT as well. Falling wedge, it's getting very, very tight right here, and you can see it's coming into this previous area of support. This previous area of support right here. What would be best case scenario is if we get a big undercut and then we potentially shake out a little bit more people and then we start heading up higher. You got to ask yourself, if you're bullish bonds, where can this potentially go to? Well, in a short relative period of time, I can see it trading back up to 136 probably within a very short period of time. That lines up with this previous volume profile right there too as well. So that's kind of something that I'm keeping an eye on, but I kind of want to see what happens after the Fed meeting. Now, from a bearish case, if we're taking a look at this, we called this out a while ago, kind of a bearish flag. We broke down, moved higher, but you can see here we're coming back into that prior area support, and there's previous other times where it acted as support too as well. So be mindful that if it starts breaking down on this weekly time frame, we have a weak PPO. It's not that great of a look for bonds. So we'll continue. All right, welcome back. So Bitcoin to gold ratio, the sailor to shift ratio, we are getting a buy signal back. Hello, but It is only Tuesday, so I'm sorry. I like to wait till week's end to see if this actually does close above that zero line right there. It's a positive sign, positive development overall, but we still have some more time to go with the price here. And if we take a look at the daily time frame for the price of Bitcoin, still, it's moving from expansion to contraction here. We've seen multiple rips where it goes rips, faded, rip, faded, rip, faded, and then we saw this little rip here, and now we're getting a little faded. So it's not looking all too hot as it stands right now, but we can very well get back above these moving averages, start heading higher. It's anybody's game right now. It's just understand that the context is currently bearish. It's going to take some work for the bulls to start moving this back up. Same thing goes with Ethereum. We're below those key moving averages as well. So it's a positive sign that we're starting to see that buy signal. However, it's early in the trading week. We have, more time to go before we get any indication of a for sure buy signal. Now, I know a lot of people that like to front run these type of signals, especially if you're looking at trading the equities, so for example, HIVE, HUT, BITF, all those different equities, because sometimes in the next couple of days, you can actually get a pretty nice pop. And, if you are into that kind of stuff, then by all means, you can take a look at some of those equities or play, try to front run a signal and get in early. Not against that. It's just, it's not part of my current strategy. All right, so let's hop into some indicators and then we're going to wrap it up. So first and foremost, there's a couple bearish things going on. So this rally itself, I'm not too convinced that it has any legs, but I'm open to the idea that there, could be some legs to this rally. First and foremost, housing index has not recouped the trend line that it broke down from. I do not like that. And then also S&P 500 has not recouped it, but it's starting to look like it is. But having that this has not still signals to me, give it some more time before feeling a little bit more confident. Another indicator that, I don't bring on too much, but this is the NYSE high-low index, and I like to apply it a 20-period moving average to it, and that's the green line. The blue line is the high-low index, and the thing that I'm showing here is when it crosses, the blue crosses below the green line, I highlighted those areas, and the reason why is because there's been downfalls on those areas. Boom, 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 and right now, well, it looks like it's about to have a bearish crossover. So if this has a little bit more legs to the upside, understand it's still in bearish context, and then you have this taking place. It could very well lead to something that we've seen previously. How far it goes down, I don't know. If it goes down, I don't know, but it is data, and I want to point that out into your direction. From a bullish perspective, if we're looking at the McClellan oscillator, though, you have the market continuing to press down and down. Meanwhile, you can see that this is building higher lows as it stands, and that puts out a bullish divergence. Same thing happened right here, where this was putting in a low. This was a higher low there, a low, a higher low, and then a low, a lower low, and then we started moving higher. Then you could see some negative divergences in this way. So divergence have helped out find some trends. Now, this is obviously a longer term one, so we'll see here if that also has legs, because if you do look, like I said, at the NYSE, could be wedging here, and that could present itself as a potential bullish move to the upside if it breaks out. Another thing that's not greatly bullish at this particular point in time is the CPC came in at 1.06 today. That's the put to call ratio. That's fairly bearish. All right, and we're still above that 0.95. We haven't actually crossed below it. We landed on it. That was giving us an early buy signal, and then we saw a little bit of a rally, but then it came right back up. So it's, it hasn't had the fully confirmed buy signal as it stands right now. So that is something also that we're going to be keeping an eye on moving forward. That's all I got for you, everybody, on today's episode. See you later.